All right, let's dive straight in. So this week we woke up to news that the 30-year fixed mortgage rate is down to 6.13%. That's not just low for 2024, that's the lowest we've seen since late 2022. And look, it's no accident it happened just before a major Fed meeting. These drops, they're all about anticipation. The market basically pre-gaming the Fed's predicted rate cut. Everyone's watching and adjusting before the actual announcement.
Exactly. I mean, people hear Fed's about to change rates, and investors, especially in the mortgage-backed securities markets, start moving right away. It's a classic pattern. We've seen this for years in real estate and finance. The market tries to get ahead of the Fed, and that plays out in these rate moves. And what's wild is sometimes the biggest moves are before the Fed even says anything official.
Oh yeah, and that creates so much confusion for people on the ground. My mate, he was looking to buy and he waited thinking, oh, rates will fall even further after the Fed cuts. I'll just hang on a bit. But then, bam, pretty much as soon as the Fed made the announcement, rates jumped again. I mean, the timing is always so tricky. I totally get why borrowers are scratching their heads.
And that's not just a one-off. We saw the same thing in September last year, right before a big Fed decision. Rates dropped leading up to it, then bounced right back after. It's almost like this cycle. You get these rumors, investors shift their behavior, rates fall, and then when the news actually hits, it can swing around quick.
Honestly, it's like everyone's nervous at a poker table making moves before the cards come out. I always end up thinking, if you're sitting at home, should you be making your real estate plan based on what you think might happen? Or just jump when there's a solid opportunity? It's no wonder people get nervous waiting for some perfect magic moment.
Right. And that's where it gets interesting. Because not every Fed rate cut has the same impact. Willie Walker, he's the CEO at Walker & Dunlop, was saying, the effect really depends on whether we're in recession or not. So, if the cut is during a recession, long-term rates like the 10-year and 5-year can actually go down. But now, the impact is not so direct. We're not in a recession, at least not by standard definitions. So the effect on longer-term mortgage rates it's much more muted.
Yeah, and Walker's point was basically, don't expect fireworks. Even if the Fed knocks, say, 0.5 percentage point off short-term rates, it doesn't mean your mortgage rate on a 30-year will move all that much. It might nudge things, but it won't send rates crashing like some people expect.
That's exactly what's playing out here. I'll tell you, in New York, our team's seeing buyers get super cautious as these Fed meetings approach. Everyone's asking, should I wait? Should I lock in now? Sometimes people hesitate so much that by the time they decide, lenders have already changed the offers. Prices and terms can swing literally overnight as the market tries to figure out where things are heading.
It's funny because whenever we talk about this stuff, especially for our listeners who caught episode 8, we're always stuck reminding people that the headlines usually lag the reality. You don't always see the effect you expect from Fed moves, and the timing is almost never as neat as it sounds in the news.
Totally. And sometimes that post-announcement period is when things get wild, not before. We've seen it in prior cycles. You get this drop right before, then news breaks and people are like, wait, why are rates suddenly going up again? It's all about how much of the move was priced in already. Predicting these swings? Not easy.
So let's break this down for anyone thinking about refinancing or buying right now. There's this whole phenomenon, buy the rumor, sell the news. It basically means a lot of the action happens before the big event. And then once the Fed actually cuts, the market shrugs or even goes the other way. That's what trips people up every time. The rates are lowest, not after the event, but in the run-up to it.
Exactly. So this window before the actual Fed decision can be a really, really good time to lock in your rate. I'll give a real local example. At Nadlan Capital Group, we had a client who'd been watching the rates day by day. We helped them lock in at just the right moment. Seriously, By the next week, the rate offers were higher. That's how quick it flips when everyone's reacting at once.
It's such a good reminder. You might get lucky waiting, but you might also totally miss out if you pause too long. And as we said in last week's refinance episode, if you're planning a refi or home purchase, you've got to keep half an eye on the Fed calendar anyway. But don't just sit paralyzed. If the math works for you today, maybe don't try and outguess the whole market. It's honestly a bit of a gamble, right?
No, you're spot on. Rates like this, they really don't show up too often. For a lot of people, now's a historically strong moment for refinancing or moving forward with a purchase. Of course, keep watching for volatility around Fed news, but acting early can really make a difference when the clock's ticking. And if you're unsure, hey, talk to your lender or reach out to us. That's what we're here for.
All right, that's it for today, folks. Keep an eye on those rates. And remember, whatever happens next week, we'll be back to break it down and dig a bit deeper. Thanks for hanging out with us.
Thanks, everyone. Great chat, Ruby. And as always, if you've got questions or want updates, give us a shout. See you next episode.